Good morning, everybody. Thanks very much for joining us. Apologies for the slight delay there in the start, but it meant you could all have coffees and everything, which is great. Welcome to day 2 of the International Investors Lounge programme here. Delighted to be starting with this topic, and I'm really not going to say much more than that, except for those who don't know me, my name's Richard Betts. I'm the publisher at Real Asset Media. Torsten and I formed that kind of 4 years ago in 2019. We published Real Asset Impact and Real Asset Insight. Real Asset Insight looks at the sort of themes, analysis, research, the kind of things that are going to be driving the markets going forward. And Real Asset Impact is specifically focused on ESG, social impact, purpose-driven investment, and we take a position on it. So that is specifically there, to be able to share what's happening initiatives, but also build a community around it, as well as actually try to drive it forward. So we take a position on it. So that's my welcome, which is great, and I'm going to hand over to Ron.
Great welcome, thanks. Let me use this one. Yeah, great. Yes, because we have a lovely program, so also a warm welcome on my behalf. For those who don't know me, I'm the chairman of the Senior Housing and Healthcare Association, and also the managing editor of this beautiful journal called Impact. And actually, I'm really delighted, because at EXPO, it's always a pleasure to meet all the family members. And I think the SHHA is maybe the most impactful family. And it's great to see all the members, happy faces, and also incredible diverse group of people. And that's awesome. And I'm extremely proud. And that's also a little intro from my side, because we're trying to make impact. That's why we are at EXPO last year. And also when we look at our family, it's growing by the day in terms of mixed stakeholders, operators, investors, banks, consultancy firms. But also, I think it's interesting to highlight that we created strategic partnerships with fellow associations like ARCO, Co-Living Ventures, and EPRA. And with EPRA, we did our first summit in Brussels, and that was extraordinary. It was crowded. It was driven by thought leadership. We had the European Commission with a keynote. And it will be a yearly tradition. So I'm really looking forward to the next one. And it's also great to see that we're getting more and more invitationals to highlight, for example, at the Polish conference where Sylvia joined this panel on senior care in Poznan. And also we did a panel on the senior co-living conference where I was delighted to run a panel also with US thought leadership. Because it's interesting to see that also when you look at senior co-living, we get a lot of inspiration overseas. So back to the SHHA. And actually I want to highlight also my team, because sometimes people think I'm important, but I'm only the chair. And I would like to get Sylvia on stage, and also a big applause, because Sylvia created again a piece of art. I think it's a piece of art. Yeah, so we have a limited amount of copies, but for all the members, it's here. And I also want to highlight another person, and that's Nicole Dines. Nicole, nobody knows you, but the persons behind the scenes are the most valuable, and you are one. So also applause for Nicole. Because she's always writing lovely articles, and especially your articles regarding the summit were first class. So thanks. Yeah, Sylvia, it's also a pleasure to work together. It's all about the teamwork, and that's really something I would like to highlight. Regarding the program, we have a 90 minutes program with, I think, the best-in-class speakers. And when we look at the topic, we've created a discussion where we, on one hand, will do a deep dive on the macroeconomics, but also have a discussion about what is relevant on society level. And also on the asset class level. And that's the reason why we've created a program where we will start with a discussion or a keynote about livable cities. Secondly, do a deep dive on affordability, which is, to my opinion, a key topic. And of course, ESG is top of mind. But I think environmental, we tick the box already. But social impact, that's the game changer. So we need to do a deep dive on how do we measure it, what do we measure, and also how do we do evaluation. So we've created, Richard, a great program. You will be the moderator. I will be a co-moderator during the panel. But we will start with Martijn. And Martijn is from Redevco, so a big applause for Martijn. And I will hand over the mic to you and the clicker. So the floor is yours.
Thanks a lot. Really excited to be here. Still have to be aware of my face everywhere on the screen and that sort of thing. So thank you for coming. It's really a pleasure to be talking about livable cities and what Redevco makes of it. So I'll give you a short introduction of what Redevco does and why we do that. So we have a vision that we want to have livable and sustainable cities to make sure that people can really enjoy their environment and that people can really get connected. And we want to be leading in that part. So we are really focusing on these large projects to do so. We are working originally from a retail perspective, and we are moving towards living. So we've got 4 pillars that we work on. Should not stand in front of it, of course. And we are now focusing on living today. So I'll go quickly through it because I really would like to talk about what living means. We acquired a dedicated residential platform called Redevco Living. And Redevco Living is focusing on the larger aerial developments where you can really make an impact. That will be always the larger residential projects with the sort of mixed use in it. And it will always be a part of a larger environment. So you really have to work together. So there's municipalities engaged and there's also other developers engaged. And you have to work together to make it really a livable city area, actually. And it's in most cases, you always look at it from a perspective in finance or in development, and you look at well, it actually all is about economics, and the people that live there are not really in focus. Just as a group, they can afford something between a low and a higher price, and that's what it is. So I think it's really nice to focus on the livable part and to focus on what people do in their homes and around their homes. So I've got some projects as an example. In Amsterdam, there's this large development. Will be a sort of redevelopment of an existing building which used to house offices. In The Hague, there's a large aerial development around the Hague Hollandspoor station. It's an area where you come close to the old city part of The Hague, and then there's the new build, the educational field where you have the sort of it's not a university, but it's just higher education. And people will come across this part of the city when they come to study from the station on, and they will pass through this city. So it will be a really lively situation where people will be trespassing, and there will people that are living there. There will be a connection. So it's really interesting to see what's going to happen there. And it has been a plot that has been free to develop for quite a long time, but it has never worked out. So now they are going to change the area, and now it will work. Then we have this project in Rotterdam. There's not much to say about it yet, I'm afraid. And another project in Rotterdam, which will be a large residential tower near the city center. And in that particular city center, we also have some really great retail venues where we find the connection between different concepts in retail that we would like to explore. And there's also this part of livable city, and we can bring these residents together with our concepts in theory, but we hope that it will work. We also have a large development in Oxford where an old 60s shopping center is going to be sort of revitalized. You can see that the University of Oxford is really coming close to this part of the city. It's on the outskirts of Oxford. And at the surroundings of the plot, there's really old houses, and the people that live there have lived there for decades, and this whole area will change within the coming 10 years. There will be a lot of people coming in, students, people working at the university. Trespassing is just living there for a couple of years, and then they will probably be replaced by other people again. And it's really, if you just look at what it is now and what the plans are, it will be a real transformation of a city park. So this is really something that we dig into. And there's also a large social examination and program on that particular plot. Last one is Glasgow, which is a large residential development in the city of Glasgow. What I would really like to stress on is that if you have a livable city, you want to have a community to make it livable. So people would really like to be living there in a way that they can connect to people, that they can feel at home, that they can feel safe. And in my opinion, it's only feasible to get engagement of people, to get interaction, if you really build that community. And a community means that you have to work together, you have to really engage with each other, so you have to organize it. So you really have to manage a community to be able to start things happening. And the community can be about all different parts of things. So you can organize, for instance, dinners or special events or markets. And that will just bring people together so that they can interact, they can get to know each other, they can have their own way of organizing venues for every other people. And it's not necessarily that everyone has to join, but it's something that will unite them in being part of this community. And I think that is really an important thing if you would look at how people live today. I live in a sort of rural area where you know your neighbors, but I know that there's also flats in Amsterdam, for instance, where people don't even know who their neighbors are. And I think it's not necessary to have so. So if someone just invests in taking it into a community, then you would feel like you belong somewhere. There's a social aspect on where you live. So I think that's really important to take that social aspect into your plans. And that means that you have to invest in not bricks and mortar, but you have to invest in people. And that's something that we're not used to. So I think that it's a big thing to be looking in the social aspects. And of course, how can you measure if you're successful? That's something that I think could be done through community. If you can measure the commitment and the connectivity, then you would be able to sort of measure how your community is functioning. And then you could probably tell more about the engagement of everyone living there and what percentage of people is joining in activities and in maybe puts messages through the community, because you can see it as an online and offline community. So you publish an event, people get to the event, people get to know each other, get to interact. They will be knowing each other. So next time that they see each other in the common areas, they will say, "Hey, hi, how are you doing?" So I think that is part of social engagement and commitment that you would like to have. So people will feel safe. They will be taking care of the surroundings. So I think it will be actually looking better and be more livable when you are part of that community. So you feel responsible actually for what's surrounding you, not just for your own surroundings in your unit, your flat, your house, whatever it will be, but you care for others. And I think that is an aspect that is really something you need to invest in. So I would say that if you put your money on community management, it's a full-time job to manage a community. I've witnessed that when I was working for the airport, where we had a community manager. It's still in place. And organizing events where hundreds of people working in your central business district are really engaging with each other from all different large companies and brands. They all sit together, have fun. They know each other, they meet each other, they come there by train and they see each other at the station. Hey, have a nice day, that sort of things. It really, really, really works. And on the other hand, there you have the opportunity that people just don't want to leave anymore. Maybe that's something that will be a sort of threat for when it comes to leasing housing. The residential is probably something that just you want to sort of follow up, you want a flow, because we need to get in pace with probably the rent level. So there's always a value level, and there you come to this corporate part again. Because if people don't want to leave, you cannot raise your rents, and then maybe the value of your property will fall behind. So that is something that I look into, could be threatening this aspect. So I'm really wondering what the panel will be talking about, will be discussing about, and I hope that you can touch upon the cutting edge between the economics and the social. And there's two sides of economics and social. So there's maybe this threat to value, and there's also a possible benefit. And where do the residents actually fall in this picture? Oh, this is not really nice, so need to put that in. I'm sorry. So we want to be this leader in the transformation of cities to ensure that they are livable and sustainable. And I hope we can prove that by doing these large aerial developments, and that we will be able to show that it works. It will take considerable time, of course, because it's not something that you do overnight. And these projects have been running already for a couple of years. But who knows, we will be able to show you the effects in let's say the next 5 years. And I hope you enjoyed what my thoughts are about livable cities and how Redevco is working on these livable cities. And I would really feel the panel thankful for being here and being able to discuss the aspects of social in housing, because I think it's really important that we focus on community, on people, and they make your assets livable. And from an asset management perspective, I think that you want no concerns. And I think that's also the perspective of people living there. They want no concerns. So I would say have a great panel discussion. If you would like to ask questions about what we're doing, you can find me here now and maybe today on our stand in the B1.
Great. Thanks very much, Martijn. Super.
Thank you very much.
And an interesting, I mean, it's good to see Redevco pushing forward some of the barriers. And we're running at 5 o'clock tonight. There'll be impact drinks at 6, but at 5 o'clock we're running a session which is specifically around the implementation of ESG, social impact strategies, and Martijn will be on that panel. There will be more of a chance to catch up on that as well. Let's move on. Because we've got a lot to fit in. So we're now going to have the social side of EU Taxonomy with Stefan Voß. So Stefan, join me here. And I was just going to say, while you're joining me, that the point about communities is very interesting, because on my road, which is quite a small North London road, a neighbour came up to me this weekend before coming here and said, when did you move in? And I said 24 years ago. So that's Stefan, over to you.
Thanks very much. So good morning also from my side. I hope you had a good breakfast at the welcome event. I now have the big task to do the deep dive, as indicated by Ron, into the social side of the taxonomy. I have only 10 minutes, so don't expect too much. It will not be a very deep dive, otherwise we would spend half a day. But as everybody knows, there are certain buzzwords in the real estate industry connected to the ESG and sustainability, taxonomy, and I think from the environmental part, everybody is normally in a position to know what he has to do because the taxonomy has developed. I would like to concentrate more on the social taxonomy, which is to come in a couple of months or years. First of all, it's just a picture of our new office in Stuttgart. You see it's a real green building and we're really happy about it. I can, of course, explain many things we discussed when we made the decision to move in, but it's not our topic today. I don't want to get through everything of it. I just want to point out that it's a very complicated regulation regime here in Germany, as well as all over in Europe. We have certain layers of regulation. So it first started with the UN regime. So the UN Millennium Declaration was the global starting point for sustainability, where many states at first time were able to agree upon certain principles which need to be observed to make the world a better planet. That was the goal of it. And then it was discussed from year over year and with very difficult discussions between countries which have certain different preconditions to cope with all the issues. And the most current success was in 2015, the Agenda 2030, where also certain goals were agreed, and everybody on the member states is now working on how to implement all these goals to receive the 1.5 degree Celsius goal, so that we keep the planet as cool as we have it now and not as hot as yesterday. We all could see it outside the trade fair. For October, it's quite warm. Then, of course, we have the European level, which also has a certain history. I don't want to go too much into detail. Many of all those regulations are well known to everybody who is working on real estate. I would only want to point out the current development of the social taxonomy. There we have a final report, which was prepared for in preparation for the real taxonomy, which is to come and to be published by the European Commission. This was agreed at the end, or it's nearly 1 year ago, but as far as I know, nothing happened so far. The EU is facing many other problems at the moment, so I think the social taxonomy will come, and I will show on the next slide what might be the content of this taxonomy. And then, of course, each member state has certain regulatory requirements which are quite different from country to country. As we are in Germany, of course, I have put together some of the regulation for Germany. It's really a mess if you want to comply with all the regulations, and it's mostly concentrated on the construction side and on the building side, and not so far yet on the social side. The report, which I just pointed out, has a certain content. They try to, as a starting point, they took the taxonomy on the environmental side, which is very sophisticated, and also the social taxonomy could be very sophisticated and very complicated. But to date, we have no specific regulation, so it's in the process of evolving. So every member of the market has a chance to put some influence. So if you have the chance to discuss with guys from the European Commission or with members of the European Parliament, of course, it's still possible to give some objectives or to argument that certain regulation would be overdone, others would be required, and would be good to have a certain level that everybody knows how to handle it in the future. Of course, is the most important thing the transparency, so that everybody has additional reporting obligations. That's, of course, a big danger that there's an overlap of the reporting regulations with the other taxonomy and the other CRESD and ESRS, so I don't want to bore you with all the abbreviations, but it's if you're in a compliance department of a company, I think it's really a mess to be on the real actual page, to be honest. The comment on the on this draft of some ideas for the social taxonomy is, and that's the good news, I think, that the guidelines should be simple and clear. So I think they understood that the environmental regulation might be too complicated to accept everything on that. And it's also very important that decent work, adequate living standards, and inclusive or sustainable communities are also mentioned. And that's something for our industry, for the Senior Housing and Healthcare Association, that might be a very good argument to say, oh, these projects which concentrate on senior housing tick the box of this special requirement which might come in the future for the regulation. Of course, the quality of information, I mentioned it before, is very important, and we'll see how this will actually put in the guideline at the end of the day. ESG, I just want to concentrate on the social side. You see the various preconditions which have an impact on the real estate sector. On the social side, we can see that we have 3 different parts which can be seen. So the internal, so what's concentrating on the structuring of the company itself. So then, of course, for me, it's common sense that you treat your employees well, that you pay the minimum wages, that you pay adequate things, that you have diversity. So all which is already in the Millennium Goals from the United Nations is covered in this social side. Externally is that any project should have a positive effect on the community. So that's something that Martijn already touched upon with livable cities. That's something that really, of course, is a very important point, that you not only look at the single property itself, but what is the additional value for the community, for the neighborhood, and that I think would be a very important thing to stress in the future. Then, of course, the senior housing scheme is very important, and that you have social living, so that you have the possibility not only apartments or flats with very high rents, but also affordable rents. That's something which, of course, is a part of the social side. Then the interesting question is how to finance that. I'm pretty sure that it's not possible to do this without any subsidies, so I think the public funds will need to be put into the game again. And of course, the construction side also have a social level, but this is also quite strictly regulated anyway, so I do not expect that there will be any surprises on that level. Well, how to measure the social impact? I know that many investment companies have created own models with tick boxes which might put some points or some benefits for the social impact of their investments. For Germany, I just found a scoring model which was prepared by an organization from the Institute of Corporate Governance and the IBS Real Estate Management Institute. It's not concentrated on senior housing or healthcare, but on other mixed buildings. But I think the main thoughts which are contained in this system are quite interesting, because they have a very sophisticated, through various layers, how to develop and how to measure with certain points the positive impact or the social impact of a real estate development. The bad news is that only that I create a nursing home in a city is not alone social. So you always have to take a deep look in the specific object, whether it fits into the community, whether it prepares some additional value, and that's the main task for all the investors to, not only prepare one for all or one fits for all models, but to just put the specifics of the environment of the concrete object in place. This is an attempt what might be content of the social taxonomy in the future. I think that we have to, of course, take a look at the asset level, which I already discussed or presented to you earlier. I think it would be too extensive to discuss this in detail. I'm pretty sure that the panelists will tell you what they are doing in their companies. We have also a valuation slot afterwards. But I think very important is the society level and the neighborhood, that you always have to bear in mind that you can put all the social points of the taxonomy, not only by creating a nursing home or a senior housing property, but it also needs to fit exactly within the community itself. And I think that's the very interesting point, how this will be put into practice and how the regulation will look like in a couple of years. Thank you very much.
Great, thanks very much, Stefan. And actually, just so that everybody's aware, that the slides, actually the majority of that, including this slide, which is really valuable, are inside the report. So don't feel you need to take a photograph of it. Please take a copy of the report and you will find that. So we're going to now focus on the panel discussion. So if the panelists could come up, that would be great. And Aaron, are you joining us as well? Come on up. And the idea behind this is, as well, is if it's a deliberately informal setting. So if you've got questions, if there are other things that you would like to ask, please do. Should we maybe just start with just brief introductions so that everybody knows who everybody is?
Sure.
Let's start here.
Sure. Yes. Hi. Good morning to everyone. My name is Yeliz. I am Chief Operating Officer at Cofinimmo. Cofinimmo is an investor in real estate and mainly in healthcare assets in Europe.
Great. Frédéric.
Yes, hello. My name is Frédéric Durousseau. I am the Chief Real Estate and Development Officer of the Clariane Group. So Clariane is formerly Corian Group, so a leading operator in Europe.
Great. Thanks. Mathilde.
Good morning, I'm Mathilde. I work for Octopus Investment. We are the largest investor in senior living and care homes in the UK, and now we're looking at expanding in Europe in the living sector.
Great. Christian.
Good morning, everyone. My name is Christian. I'm managing partner at Neworld Investment Management. We invest on the one hand in operators, but also in the corresponding real estate, and a couple of years ago we co-founded a senior housing operator, and are very much interested in the topic of making, as Stefan said, the S more relevant.
It would be interesting just to pick up, and anybody can take this, but any reflections that you've got. I mean, we had an interesting session yesterday which was looking at social impact in cities, and what both the cities and also the investors could do to be able to try and bring that forward. But any reflections on what we've heard so far from anybody?
Yes, I think like one of the key points in terms of social impact and what Redevco is doing is we recently invested in Brand Cross, and this is like major regeneration area. We are going to be part of a mixed-use master plan, and this is like bringing community together from like different regeneration. It's going to be also net zero town. Vattenfall, which is a Swedish company, is going to bring the energy. It's going to be green energy. So we're making a lot of effort to find partners that have similar social value that we have in terms of ESG, and it's very important when we invest in senior that they're part of the future of any city.
Okay, good. And I'll make it a rule that everybody can just come in. You don't need to wait for me or anybody else. Just come on in.
And the audience too.
And the audience too.
If there are any questions, I will be the flying keeper, how we call it in the Netherlands. So please raise your finger and I will come over to you.
You'll spot it immediately.
I'll spot it immediately.
Excellent. Very good.
I just would like to add, since we are based in Germany and we are well aware on the regulation standards and the framework that the BaFin is giving to all the institutions that are trying to come up with Article 8, Article 9 funds trying to promote the S. I think there is only one or two regulated entities by now that have the approval to be a social impact fund. And the fun thing is, I think we find it funny because that there is actually no such thing as a framework, and that's why we as a group here can really make an impact in also educating the regulator on what really is important. Because the guys at BaFin, probably they should be here, they should be listening to us saying, oh, this is how the industry thinks, maybe we incorporate that in our application processes and say, okay, if you're adding these different aspects to your asset, then you tick the box for S.
Yeah, I think it's interesting. Also discussing with cities, you mentioned their Article 8 and 9, which everybody in this room will no doubt understand, but actually cities have no idea what that means in terms of the efforts that the real estate side is going to in order to put in social, environmental areas. Frédéric, let's pick up with you a little bit, just in terms of how you're seeing, I guess, how some of these changes in terms of the social side are going to be influencing what you're doing.
Yeah. First, we have to remember that our activity is strongly regulated. So 85% of revenue of an healthcare operator are regulated by the state. And so in every country, the regulator sees things differently. Also, when we are talking about a federal state like Germany, we see that each land, each Bundesland, has itself its own view of what should be, what a building should look like, what should be the single ratio between a single room, double room should be, what should be the minimum size of the rooms, what should be the orientation of the building, etc. So we have already the view of regulators, which is very strong, in fact, on the operators and on the real estate and also on the investment world, because the investor will also follow what the regulators want, and so will basically ask the same to operators. Is it a building which is compliant with all the regulations, or is a building at risk of a changing of regulations? We know very well in Germany the LAG regulations, Landesheimgesetz, and all this, of course, is reflecting the view of politicians or regulators on all healthcare unit, senior housing should look like. And of course, we can have different ideas, and we see that different lenders have different ideas, and different land in Europe have also different views to tackle the social issue.
Okay, good. If anybody else has got a perspective on that, do give it. But I was interested also just to pick up on, because obviously we're looking here from an ESG perspective, as well as the decarbonisation, and just in terms of the sort of route to being Paris proof, I guess where does everybody feel that they are at the moment? What's to come? What initiatives are there? Feel free to pick up whoever wants to.
I would like to just build up on what Frédéric said, about the Bundesländer and each having their own rules. I think from an investor point of view, what we can do is actually look at all the different regulation and try to make a combination of what is best, even if it's not required by that specific Bundesländer. So that's something that we do in our team as well. Having said that, it's heavily regulated. Just to pick up, just a general comment, I'm glad that we are talking about the S side of ESG, which means that the E side is more or less accepted by everyone. So that's already a good news. From an investor point of view, I think that key is collaboration. Community was mentioned by Redevco and by this panel as well. If you want to have social impact, you need to work together. That was basically your point of view as well. And in our case, it's working together with the operators and making sure that we understand each other, and that our collaborative objective is to make sure that the life of the residents and the life of the employees, are improving. And there are indeed ways to do that. I mentioned just what, from a building point of view, we can do, but I also think that technology plays a big role in it. Making sure that technology is foreseen in your buildings, just simple examples, making sure that the water tap, is just cut off immediately and not waiting that somebody checks it. these are small impacts, but improve the life, I think, of the residents and the employees. So there is a lot to do in that area. And I think that, there is still this combination between the E and the S. Companies such as us, we try to improve the buildings and try to measure it, because at the end you need to know what you're talking about. Otherwise, it's all theoretical. And improving the portfolio with labels such as BREEAM, just to take an example, that has also an impact on the social side of the use of a building. I think it's a good way to, have some guideline to collaborate together, or any other, guideline.
Maybe a question like, how are you tackling the split incentive issue? Because in terms of working on the existing stock, making it Paris-proof, one of the challenges is outdated stock, where you need to invest, and maybe the benefits are on the OpCo side. How are you tackling this in the collaboration perspective?
The existing, first of all, at Cofinimmo, I'd just like to highlight that as well. ESG is not new, so we've been working on it since 2005, 2006. So we had already foreseen capital expenditures to improve the existing stock. Having said that, you're absolutely right, and we need to be rational about it. We do have contracts with the operators. And then, the majority of the operators, we've been discussing with Frédéric yesterday, also some ideas, are also, investor operator are working, trying to collaborate together to put the focus on the building, the resident, see first what can be done, and then talk about who and what. So I think there is this, we can use community again, this collaboration between investors and operators as well.
And in terms of we've mentioned a bit the social legislation side and what may be coming. Is that going to be very different in terms of the regions, I suppose, around Europe? And, particularly if we're looking at Germany versus Spain or versus the Netherlands, for example. But what are we seeing there?
Well, I can only speak for Germany at the moment, so I assume that going forward there is a unified approach on the European level. I hope so, because otherwise every legislation would be trying to do work in detail, and in the end most likely would come up with something similar. So it would be helpful to have a unified approach from the beginning. One thing I'd like to pick up is also the different regulations in the Bundesländer. I'm not sure if everyone is aware, there was an initiative by the German Bauministerium, Mrs. Geiwitz, to come up with a unified federal building code, and she really put that quite high on her agenda, and I think everybody in the room or in German real estate would totally agree that this makes absolute sense to stop these different approaches in the different lenders. All of a sudden, a couple of weeks ago, this project was more or less buried. And nobody talked anymore about it anymore, at least from the side of Mrs. Geiwitz's people. I think that's quite sad, because in times like we have today, where easier building regulations and streamlined processes can help to recreate value that we've lost over the last years, and an initiative like this is really helpful, really, to cut away unnecessary costs of the planning phase. And apparently it has been lost in the political process.
And maybe also Mathilde, because it's nice that Octopus is on stage, and you're or in general focused on the UK markets. So I think when we speak about social impact and also legislation, maybe UK is sometimes a front runner. You're out of EU, sorry for that, but maybe a front runner in that perspective. Can you share your sights on it?
Yeah, of course. So first of all, I think like one of the saying in Octopus is like, this is not what we do, it's how we do it. And Octopus is a B Corp, so that's something, you know, like the ESG is at all different levels. It's not only on the projects. Of course, we focus on construction, so we're trying to get like BREEAM in use, very good, excellent, if possible. So that's the newest like planning permission. And also during the construction process, we work with the constructor. So for example, we make sure that they have social apprenticeship, that they open like their workforce, that the workforce have access to, you know, like mental health app or like support also, money coaching. So, you know, like quite into the details of it. Once the asset is built, obviously we have senior housing and care homes. Senior housing, it's a build to sell model in the UK. However, like the operators such as Audley and Elysian that we work with very much focus on making sure that they do what they can. They put also like their customer on board. They talk to them about ESG. They're very receptive about it. And for the care home, we have tenants and there is a green clause, of course. But I think it's very interesting is with Ukraine war, like obviously the utilities costs have increased. So they're much more receptive about how to reduce the utilities costs. So they're much more receptive to have photovoltaics panels on their roof and finding way to reduce that. So we work with them to be able to do that. And the care home fund have a 5-star GRESB rating, which is obviously very good. So it's working on all the different aspects of it. I think what I would really like to see a little bit more is research that, you know, like quantify the S impact in senior living and in care home. I know like we have a couple of numbers, but I would like to see that published a bit more widely. You know, like generally speaking, senior housing is much more of a choice than care homes, which is usually needs-led. We have numbers that it reduces the number of time you're going to go to an hospital. It helps you living longer and happier to be there earlier. So I think there is huge benefit to the society, and we would love to see it much more like quantified.
But are you then especially searching for OPCO information? Because what kind of information are you searching for? Like you're referring to like prevention.
Yeah.
So that's a value chain information flow, which is quite difficult.
Yeah, it's very difficult to measure. I mean, I know like there has been a couple of research commented on that. So for example, how much the NHS, which is a social security system, is saving by having people in senior housing. So that's something we look at, but obviously it's very difficult to come with a measure for it. One of the benefits also of senior housing is you have 7 million of beds that are held by senior citizens that are not adapted for them. They don't need all of them. You know, a lot of people have 3, 4, 5 beds living in a big house. They're not close to healthcare. So that's the kind of information you want.
Yeah, but also like, and that's also a little bit related to your neighbor Frédéric.
Yeah.
I think especially when we're focusing on care homes, because I think it's fairly important to distinguish all the sub-asset classes, because we're not talking about one box. It's from independent living, senior living, co-living, assisted living, to nursing home and hospices. That's the range. But for example, on care home perspective, should there be a win-win situation where the operator and investor can align on gaining data on the OPCO and PropCo, where we can improve the business case on a more holistic level? I'm very curious about let's call it the common approach between the operator and the investor. Maybe first you or Frédéric, would you appreciate if your investors would ask terrible questions about your operational performances?
Of course you would.
Yeah, we prepared this question, so I will never blame it. And never.
I could say they already do, but no. In fact, we feel that what we do is a lot more complex than what we used to do 5-10 years ago, and at a certain stage, you could say, okay, investors, it's mind your own business. Operators, mind your own business. and that's it. That's not the case anymore, both contractually speaking, because if we take only the lease contract, which is the main tool that regulates let's say the legal obligations of both the tenant and the landlord, you see that all these leases are quite silent about environment, about social, because they regulate things like it was the case sometimes several decades or several hundred years ago. For example, they regulate what should the landlord pay, what should the tenant pay. But when we have new, let's say, regulations, who should be the one who bears the cost of this new regulation? And that's typically the case for environment. We all need. We have a long-term goal that we can all share, which is the 2050 net zero. But how to reach that goal? It's very long-term. Politicians are also short-term sighted, 5-6 years. Lease contracts are 10, 15 years max. So these are still things which have to be discussed and agreed together. And if we could say that several years ago it was quite easy, the discussion between an investor and a tenant, it was okay, how long is my lease, what is the level of the rent that you will pay. And today it's a lot more granular. Okay, how do you treat your employees? What is the average tenure of your employees? Do you have enough staff ratios in your premises, in your facility? And so what we should do, of course, is not put all the burden of the operator. So we should not have a list of questions and the operators having to only to tick the box for all the answers, but we should really have a common approach to agree on the common goal and to see how we can together reach this common goal. And well, I think that's the future of the relationships between investors and operators.
Great. It might be interesting just to pick up on, I guess, because again, as Ron mentioned, there's different subsectors within that. Just in terms of the sectors that you're in, maybe just some of the initiatives that you're working on in terms of the social side especially, because that will be interesting then to pick that up and see how that compares in terms of the measurement side that we're going to have next. So it'd be interesting just to get some of the initiatives that you're doing at the moment. Maybe
absolutely. Just to, as a reminder, we're the real estate investor, so we're not responsible for the operational side. And we do ask more and more questions because it's also something that is very lively and present in the environment. So some do send the info, others don't. So that's something that we have to deal with. Having said that, some countries, like in Germany, have their own platform as well, the MDK, that gives some information on the operational side as well. From our perspective, again, I don't want to repeat myself, but what we can do is improve the infrastructure that we lease out. And then just to pick up on what Stefan said, and make sure that your buildings are integrated within a large community, not in the middle of nowhere, but the link to public transport, the link to some retail, the link to a pharmacy, just to make it easier for the people working there. Those are important issues as well, and I strongly believe that healthcare should be seen as a part of a community and not just one asset where you basically send off people who are in need of care. And depending on what type of healthcare asset you have, it could be different. For example, I think that service living should be really in CBD locations because those people need to go out, and so that's something that we talk about with the operators. And to make it even further, I think that within a healthcare asset, you can also create a community. You know, make sure that, for example, have different types of healthcare on one asset. You can have some service living, you can have some ambulant care. That's also, from a social perspective, I think an added value. And you know, Frédéric can surely tell more about that, but I think loneliness of the elderly people is a major issue, and we need to make sure that the employees that are working there, the people, you know, the residents living there, the families that come there, do feel in as part of a community, and that we tackle the loneliness of the residents.
Yeah, because maybe Frédéric, you've been working on a senior co-living model. And I think it's fairly interesting because it's not solely focused on cities, but also on rural areas.
Yes, exactly.
And maybe very briefly, can you highlight what's the effect of your, because you have like, I think 100 amenities already, or even more?
Even more,
Can you share a little bit the outcome at the moment?
Yes, with pleasure, because I think this co-living concept meets and ticks the box of at least two social initiatives. One, it has been said just before, it's about affordability. If we offer a product on the market which is, let's say, more affordable than alternatives like nursing homes, then we have first we tick a first box of a social affordability, and I think it's one major tick in the box.
What is affordable? Give me a number.
Just to be very transparent, in a co-living in France costs in rural areas cost for the resident about 1,700 euro per month. If you compare this 1,700 euro per month in a private nursing home, it's the double. It's more than 3,000. In a public nursing home, it's like 2,400, 2,500 euro per month. So it's an affordable solution because it focuses smartly on rural areas where the land is cheap and in large supply. And we can focus on small units, and these co-livings are typically 2 by 8 beds, so meaning it's a big home, or it's two big homes, in fact, two co-living, and this tackles directly what Yeliz just said, because we are all social animals. Humans are social animals, and what is terrible when you age is to feel alone, to feel lonely, and let's say in a 100 beds nursing home or in a 120 beds assisted living, you don't have the same relationship as in a 8 persons co-living, which is more a family setting, and where you take all the meals together with your mates. And if you want to have your time alone in your room, you can as well. So we think it's a great solution because it tackles at least these two social dimensions which are very important for the
average age of this target group? Is it like, are you entering at 65 or is it more towards 70, 80?
No, it's 85 years old.
85? Okay.
85 years old, and it's more for people who are typically middle, I would say, independent. So we know that, for example, nursing home is focusing really on the more dependent people. So we have scores different in Germany, in France, but these typically would be middle scores in Germany or in France. So fairly independent, but losing progressively their autonomy.
And Christian, I know you've kind of developed a sort of scoring chart almost. Maybe just, very briefly, just highlight that a little bit, because I think that may also be interesting, just as a lead in to the next presentation.
Yeah, thank you, Richard. When we had our preparation talk for this panel, the idea of the scoring model came up, and we sat together with our team and said, okay, let's try to make it quick and dirty and come up with some ideas. And we brainstormed and we developed our social impact scoring model, saying, okay, what do we really need to take into account? And there are so many factors if you're looking at senior housing. One is, let's call it quality of care. The people that are staying there, they must get the best care that is available for that relevant circumstance. And second part is this community engagement. So they don't need, they must not feel lonely. They really have to feel part of a community. And so we came up with little details that all fit together. And then we ask ourselves, okay, this is quite interesting. How do you really integrate this into new projects, or how do you make operators or investors use such kind of scoring? And what was said before, I think we don't need another rating agency or some kind of stamp saying this is BREEAM elderly approved or whatever. I think what we need is some kind of self-reflection on the market participants, and maybe SHHA can help to build this kind of community within the operators, saying, okay, let's try to create something that helps to make things comparable and that integrates all these different aspects. So nobody only focuses on energy efficiency anymore, or all the little parts that have been mentioned during this discussion, but we try to get a holistic approach on what needs to be integrated to have a truly holistic sign of a really good care home or good senior housing project.
Yeah, because is it focused on care homes or more on the independent living?
No, it's both.
Oh, it's okay.
So if you're saying independent living, you just cut out a bit of the care aspect. That is only a part of the entire scoring. So you can get high scores on the other scales. So you don't need to have this care part, or you just say, okay, it's not applicable because we are not a pure care home, but we offer additional services that help the tenants to live an independent life. And I think that's most important. Create a happy, independent life for the tenants.
Yeah, so it's more like searching for one language where we also can speak, and even maybe on an educational way, help the legislations to create the right set, where we have the right goal setting. I'm also watching our time, Richard, and we have
who's talking, Ron.
Yeah, no, I'm a good talker. Sorry for that. No, maybe first the question: if there are questions from the audience, then we can pick it right now, because I think we're using the Q&A time for the final slot with Raoul and Max. So, are there any questions? I'm always looking at the body language of people. Do you have a question? No? All good? Great.
Great, super. Well then, if we could thank our panel, that would be great. And then we're going to thank you very much. And I'd like to invite Raoul Thomassen from Aedifica and Max Eiting from Savills. And then this is a really fascinating part, I think. Come on up, guys. Yeah. In all of the discussions we've had where we've mentioned social impact, one of the key challenges has been how do we actually measure this? And that's something that the industry is trying to tackle as well. So welcome. Very interested to hear your thoughts, gentlemen.
Very good. Thank you, Richard. So for this session, we've heard from the various speakers, there's probably not going to be a very definite answer on how to exactly measure the ESG impact. I think for the the environmental part, we have come a long way. But on the S and the G, there is still a lot of things to be clarified. Within the sectoral landscape, if we look across the globe, there's a lot of data being shared, especially if we look at the US and the UK market, both on the landlord side and the operator side, could be very critical to also engage with the regulators. We've heard before that engaging with regulators is important. If we can be more transparent about the state of the elderly care sector, that could help to fuel that discussion. Now, if we look at ESG and we focus on the S, so the social impact, there are a few things that you could say, how do I approach that? I think if people are really interested into that, Stefan mentioned this ICG model. It's definitely not going to be the solution, but if you want to look at a structured approach, I would recommend to have a look at that. What you see is, if you take the level of the asset of the care home, what is the social impact of that? You could look at things like the value chain of how many people work there, how many people work directly in the care home, how many people are indirectly involved in that care home. You could also look at the well-being of those people working there. Typically, especially in the care sector, you then start also looking at the level of the residents' welfare, so how is their view on the care. If you then go to the level of neighborhoods, you have to take into account that there's a lot of opportunity cost provided by having this care home facility nearby, where families would visit the residents, their mom, their dad, where you take away the direct need to take care of them yourselves. Those are huge opportunity costs to the society that are being provided. If we want to measure that, there are approaches that say, okay, why don't you engage the community and do surveys and find out what is the contribution. That still has a bit of a subjective allure, because it's not as quantifiable as a CO2 emission, obviously. But we need to find a more structured approach comparable to some of those models to actually do that. So I think on the social side, we will see that we have to come closer to a real model. Which brings me to governance, because there is a good link there. If we look at governance, people would say, okay, we have to speak about transparency. We have to speak about engaging all the stakeholders in the value chain, and we have to speak about risk management. And especially on the transparency side, we could fill a whole day session on things like CSRD, EU Taxonomy, things that are touching almost all of us in the value chain, especially today the somewhat larger corporations, and those frameworks, CSRD, but also EU Taxonomy. If we speak in the sector, it's not that is all crystal clear. It's not that you can just read it and say, okay, I know exactly what I need to do. There's a lot of clarification still needed. Some of them even still need to be translated on a national level. And then many of our companies operate internationally, so then figure out what that exactly means if you are in 6 countries or 8. Yeah, so that's a big task to come. So in terms of measuring that, looking at the transparency, working with your stakeholders, but also on risk management, many of us are expected, for example, in the landlord side, to exactly know, are you providing a compliant building? Is it safe? Is it accessible? Those factors all play a role. For this session, we said, okay, but if we look at real estate, if we look at investors, there is typically hard numbers that people look at, but how do you link that to ESG? So we said we want to speak a little bit about valuation, and we want to speak a little bit about investment. So next to me we have Max, who will also be able to shed some light on, for example, what do we see in terms of the value of assets nowadays when we start comparing their ESG qualities?
Yeah, thank you for your introduction. Yeah, maybe just introduce myself first. I'm Max Eiting. I'm running the healthcare business for Savills in Germany, and thanks a lot for having me here on the panel. What do we see on the market? I think there are two main points. The first is investors who are looking really for core assets which are completely ESG, completely combined with ESG, and the other one is the value add strategy with getting ESG properties. So I think at the moment, of course, the core business is pretty difficult because money is expensive, and there are not a lot of developers who are building at the moment. So they had to change into the new strategy to value add strategies and running to ESG and conform to ESG. What we see when we're looking for some prices or multipliers, I think it depends a lot on the deal structure. Maybe, for example, if you can overtake subsidies from KfW or something, or you can overtake cheap loans from the developer. We are talking about for care homes. We are talking about multipliers above 20 anymore. If you can't do that, we are talking about multipliers about 18.5 for core assets. Senior living will be a little bit higher, but as we see on the transaction market is that every investor is looking a different way on the ESG topic, and that's our topic to measure when we are talking in process to 5, 6, 8 investors, and we got maybe 8 ESG due diligence. We get 9 outcomes. Yeah, so that's a big point. And there's another big point. As you all know, in the German market, a lot of operators are small operators, owning just maybe 2 properties. Maybe it's a family business. If you talk to them and say, "Okay, we have to talk about ESG," they, what's ESG? I mean, I'm running the family business over 30 years, and before my dad did. What's ESG and what are you talking about? And to create an institutional product is and the communication between the seller and the buyer. I think that's the main point, and and to be transparent is a main point.
We spoke about this previously, Max, when, for example, say 3 years ago, we had 2 comparable assets. One, in terms of operator performance, one would be a bit greener than the other, but in the past, there was such high demand for this type of real estate, you didn't really see any differentiation in the pricing. How are we there today? How does that compare to today?
Yeah, as I said, I think the investors are looking really different into ESG. We have a lot of challenges, and we see a lot of things according to CABEX, for example. Yeah, the strategy to ESG. That's a point of valuation you need to know. As I said, always the ESG due diligence. I mean, there are a lot of tools on the market. We build one too, but actually, there are no comps at the moment, or there are really rare comps, and that's really difficult for us to introduce that into valuation.
Maybe then one point on the investor demand for this type of asset. How do I bring such an asset to my investment committee, trying to convince that indeed we would have to invest somewhat more to make this asset ready for 2050? that could already be a challenge by itself, but with the help of experts, you can say, okay, I need to make those technical measures to get to those very low emissions. At that stage, we would still then have to work very closely with the operators like Frédéric to say, if we want to do those measures, if we agree on the financial side, this is a live building with residents inside, this is a very pervasive measure, how do we achieve that, right? Because we can't just move the residents out to the parking lot. So that's an operational thing. And what's definitely also coming more and more clear, as investors and operators, we can want a lot, but for example, if the rest of the value chain has not adapted. We were just speaking about, I'm working with a developer, I want to manage my embedded carbon during the construction, and I have all kinds of demands between building passports and diesel trucks that this contractor has never worked on. It's not a legislation in Germany, so why do I want all these things? It will make it just very expensive to then work with specifically that part of the value chain. So there's still a lot of ground to cover, even if you want to go at a faster speed. It's a societal move that would need to happen.
Thank you, Pablo. That's great. Really interesting discussions here, I think. We're up against the end of our time now, but thanks very much to everybody for joining us. And Ron, last words to you.
Yeah, and also I would like to highlight that I appreciate also the openness of conversation, because I think it's quite rare when a professional is open that we don't know it yet. So I also appreciate from both gentlemen that it's work in progress, and I think it was already pointed out by previous and also the panel that we really, and that's also I think one of the purposes of SHHA, to collaborate on what actually the road to Paris, but also the road to social impact. Because I think the valuation part, also when you look at the green premium, brown discount side on the E, we're seeing what's the difference in terms of being compliant, yes or no. It's a game changer of 20-30%. And my dream, maybe a little bit of the SHHA dream, is when we can also prove the social impact value in the exit yield, that's going to be a game changer. So that's maybe also my wish for the next year of the SHHA, and that's also why we need all those brilliant members to work together, to do some research, maybe even think about the framework on social impact, because when I'm listening very carefully, I think we could work on that one also to help the legislation side to have the right direction, so not ticking all the boxes. We don't need more paper. I think there was a brilliant one-liner from Stefan. We don't need more legals. Let's make it simpler, but also more pragmatic to the right direction. So thanks for all the contributions. Thanks, Richard, for the brilliant moderation. And applause for all the speakers. And let's go for a coffee.